Hi, my name is Karan Batra and I'm from MyWay. So do you need to pay tax on the profit of your mutual fund investments? Yes, you do need to pay taxes on the profits that you make from your mutual fund investment, but the same is subject to the type of fund that you invested in and for how long have you held the investment. Depending on the two, your taxability rate could be high or it could be low. So how are equity funds taxed? Let me explain this with the help of an example. So let's say if you invested in an equity growth fund for a period of less than a year and made profit and sold. On the profit amount, you will end up paying 15% short-term capital gains tax. Now let's assume you've invested in an equity mutual fund for more than a year and you have made profit and then sold it. If your profit amount is less than 1 lakh, you do not end up paying any tax. But if your profit amount is more than 1 lakh, on the amount which is more than 1 lakh, you will pay 10% long-term capital gains only on that amount. So what if you invest in an equity fund but in a dividend option? How does the tax treatment of that work? So let me explain that. The mutual fund company deducts something known as DDT, which is dividend distribution tax, which is 10% plus surcharge plus cess. And the same gets deducted from the mutual fund company directly and it is not taxable in your hand. It is only taxable under one condition. If the total dividend that you earn from all your mutual funds exceeds 10 lakhs in a financial year, you will pay 10% on the amount more than 10 lakhs of dividend that you received in that year. So how are your debt funds taxed? Let's take an example to understand the same. If you invested in a debt fund and you have stayed invested for a period of up to 3 years, but not more than that, whatever is the profit that you get from the same gets added to your taxable income and you pay tax on it basis your highest slab. What if you stayed invested for more than 3 years? In which case the tax treatment is different. You have two options in that case. Either you can end up paying 10% flat tax on your profit or you have to pay 20% tax with the benefit of indexation. So if you invested in a debt fund and you've selected the dividend option, how does the tax treatment work? Let's understand the same. If you've selected the dividend option, the mutual fund company will deduct the tax at source under something known as DDT, which is dividend distribution tax. The rate for the same is 25% plus cess plus surcharge.